Hey everyone, and welcome back to the Crypto Deep Dive. I'm Laurie, and with me as always is our go-to blockchain brain, Nick. This is podcast episode 11, and today we're diving into two major topics shaking the crypto world: the launch of XRP Futures on the CME and the evolving regulatory landscape, especially the impact of the Genius Act. Nick, how's it going?
Doing great, Laurie. This week has been absolutely packed with developments, especially around institutional adoption and regulatory momentum. The XRP futures launch on the CME is a big signal, and regulation is finally catching up in some major ways.
Now, I'd normally start with the market's overview now, but man, I am a bit sore today. Want to do me the honors?
Now, that's a strange twist of events, but yeah, absolutely. So today, Tuesday, 20th of May, 2025, Bitcoin is leading the way at 106,117 US dollars. Ethereum is sitting at about $2,487, and XRP is at 2.3487. We've got XLM at just over 28 cents, Sol is at around $167.2, and ADA is trading at around 73.5 cents. Shall we get cracking with the main topics?
Let's get right into it. CME launching XRP Futures. That's pretty huge, right? Can you walk us through what happened?
Absolutely. On May 19, the Chicago Mercantile Exchange, short CME, officially introduced XRP futures and micro futures. This gives institutional investors a regulated way to gain exposure to XRP, which is a major milestone for the asset. Just as a bit of background, futures contracts are standardized agreements to buy or sell an asset at a specific price on a specific future date, typically traded on exchanges like the CME Group. These contracts are used for hedging, speculating, and pricing commodities and financial instruments, and now XRP got thrown into the mix for these investment contracts.
So, what's the difference between regular and micro futures?
Good question. The standard XRP futures contract is for 50,000 XRP, while micro contracts represent just 2,500 XRP. That makes the micro version more accessible and flexible, especially for smaller institutional players or those wanting to test the waters without too much capital at risk.
And how was the market response?
Impressive, actually. On its first day of trading, XRP futures racked up $1.5 million in volume. Most of that came from the micro contracts, which isn't too surprising. Lower barriers to entry often lead to higher initial activity. This mirrors what we saw with Bitcoin and Ethereum when their futures launched.
Does this kind of activity impact the XRP market more broadly?
It does. The increased liquidity and regulated trading environment help with price discovery, which is crucial. When institutional capital enters the market through regulated futures, it typically smooths out volatility and brings more transparency to the pricing process. In the long term, it can help legitimize XRP in the eyes of conservative investors.
And what about ETFs? I've heard people mention this could pave the way for an XRP ETF.
You're spot on. The launch of XRP futures really strengthens the case for a spot XRP ETF. Futures show the SEC that there's infrastructure in place to prevent market manipulation, which is one of their biggest concerns with crypto ETFs. It's not a guarantee, but industry experts are saying it's just a matter of time now.
So futures could actually help unlock even more institutional demand?
Exactly, it provides a regulated gateway. If the SEC sees a well-functioning, compliant futures market, it's easier to greenlight an ETF. It also opens up investment from pension funds and asset managers who can't touch spot crypto but can work with regulated derivatives.
All right, let's shift gears. The regulatory side of crypto has been on fire lately. The Genius Act just made headlines. What is it and why does it matter?
The Genius Act, short for Guardrails Establishing Necessary Infrastructure for Uniform Stability, creates a federal framework for stablecoin regulation. It mandates one-to-one reserve backing and enforces strict transparency requirements. This is a big move because it's the first serious attempt at setting consistent, enforceable rules around stablecoins at the federal level.
That's stablecoins, but how does it affect altcoins like XRP or Solana?
Great question. The Genius Act sets a precedent. Lawmakers are now openly asking, if we're setting reserve and disclosure requirements for stablecoins, shouldn't similar standards apply to altcoins? It could be the beginning of broader crypto asset regulation, especially around how different tokens are classified and monitored.
Got it. So it could lay the groundwork for a more unified crypto policy?
Exactly. Up until now, it's been a patchwork. This could lead to systematic oversight, defining which assets are securities, which are commodities, and what rules apply to each.
How's the political landscape around this? Are lawmakers really behind it?
Interestingly, yes. The bill actually overcame a filibuster in the US Senate with a 66-32 vote. That's bipartisan support, which you don't see often in crypto discussions. And it's not just about stablecoins anymore. Some House Republicans are proposing to merge it with a broader crypto regulation bill.
So this could evolve into a more comprehensive law?
Potentially, yes, but it's not over yet. The bill still needs a final vote in the Senate before heading to the House of Representatives. If it passes, we could see the first real federal crypto framework become law within months.
What's the market been saying?
Aave, a major DeFi platform, surged 20% after the bill advanced. Investors see this as a sign that DeFi regulation is coming and that it might actually benefit projects that play by the rules.
Interesting, but I imagine not everyone's happy?
Correct. Tether and other stablecoin issuers may need to restructure their entire operations. The new rules could require stricter audits, clearer reporting, and possibly even US licensing for those serving US customers. That's a lot of compliance to take on, and it could reshape the stablecoin market significantly.
Let's zoom out. What's next for altcoins in general?
If the Genius Act passes, it opens the door to a broader altcoin classification system. Think of it like this: some tokens may end up being labeled securities, others as commodities. That classification affects everything: who can trade them, what disclosures are required, and which regulators get involved.
And I guess that ties back to the SEC versus Ripple case, right?
Bingo. That case is the litmus test. If XRP is ultimately ruled not to be a security, that could influence how the SEC treats similar assets. But if the SEC wins, which is very unlikely at this point given that Ripple and the SEC are very actively working on settling, it could mean a whole host of altcoins are suddenly subject to strict securities laws.
So investors should be paying attention not just to prices, but also to policy?
Absolutely. Regulatory clarity could either unlock massive institutional capital or freeze parts of the market, depending on how strict the rules get. It's a critical time for crypto.
Wow, that's a lot to digest. But it really feels like we're entering a new chapter, right? Between the CME's XRP futures and the regulatory wave from the Genius Act, crypto seems to be moving into a more mature, institutionalized phase.
That's exactly right. We're seeing the convergence of traditional finance, regulatory clarity, and crypto innovation. It's a messy process, but ultimately one that could bring a lot more stability and legitimacy to the space.
All right, that's all we've got time for today. If you enjoyed the episode, don't forget to like and subscribe and hit the notification bell. And do leave us a comment below. It really helps others find the show.
And if you've got questions or topics you want us to cover, leave us a comment below. Thanks for tuning in, and stay curious out there.